50 years from now, people will look back and say that, wait a second, there was a country called Japan, because it will no longer be around, since Japan's economy is collapsing so fast that 50 years from now, I don't think anybody will actually remember Japan. And 100 years from now, a country like Japan probably won't exist, because the situation with the Japanese economy is so bad that it literally has been collapsing for the last 30 years. So let's dig into the numbers and realize what exactly is happening, because Japan is one of the largest economies out there, and anything that will happen to the Japan's economy will have serious implications, not just on the US economy, but on the global economy as well. So let's try to figure out what exactly is happening with the Japanese economy. Now, if you take a look at the Japan's GDP, you will realize that there was a meteoric rise from this period up until 1960s, or I would say 1990s at this point. Like, Japan's economy grew from less than $50 billion to it's like $5.7 trillion. And that growth is so much that the average Japanese that lived back in 1960s felt significantly wealthier. And if you compare Japan's GDP per capita to the United States, the average Japanese was actually not significantly, but it was much more wealthier than the average American. But guess what happens next? Japan's economy here, it absolutely collapses, and it leads to absolutely nowhere, because today's Japan's GDP is a little over $4 trillion. Now, let's take a look at the historical numbers. This is the GDP of the US over the exact same period. And today, the GDP of the US is $25 trillion. Now, if you go back to 1990s, you will realize that this was the point when Japan almost caught with the United States. But guess what happened? Today, the difference is absolutely massive. Yes, Japan's $4.2 trillion GDP is a lot, and it makes it one of the largest economies out there. But over the exact same period, when the US GDP back in 1990s was around $7 or $8 trillion, probably less than that, it grew a few times to $25 trillion. Look at what happened to Japan's GDP. Now, if you compare that to China, you will see massive difference. Like in 1990s, China was absolutely no one on the global stage. Today, China's GDP is like 5 or 6 times much larger than the Japan's GDP. And if you go to the GDP per capita, things are so bad that you won't probably imagine. I guess the only country that we can actually compare Japan is the United Kingdom. But even if you actually put how bad the UK GDP is compared to the Japan's GDP, I think in this case, even kind of the British economy is doing much better than the Japanese economy. So let's take a look at the numbers. In 1995, the US GDP per capita was around $41,000, which made it back then one of the wealthiest countries out there, one of the wealthiest people in that country. However, compared to Japan, back in 1995, during the exact same period, the GDP per capita was $44,000. Now, the difference is not really a lot, but the thing is that look at the difference that happened after that. Look at the growth of the United States and look at the GDP per capita today when it comes to Japan, which is around $34,000. So Japan's GDP today, or the average Japanese today, isn't even half as wealthy as the average American, even though that 30 years ago, the average Japanese was wealthier than the average American. That's how bad the situation in Japan has got over the last 30 years. And if you kind of scroll down, you'll find out that the US national debt compared to its GDP is around 120%. And that growth has been significant over the last 20 or 30 years as well. Because we know what happened in 2020, we know what happened in 2008, and we know what happened between those periods when the US actually started throwing trillions of dollars into the economy. But the US national debt compared to Japan's national debt is absolutely nothing, because Japan's debt to GDP ratio is significantly worse than the United States. And since the crisis began in Japan, the national debt grew to almost 260% of the GDP. Now, that is nothing. I mean, that is significantly more than the United States 120%. Of course, the US debt is significantly worse because the United States owes a lot to the rest of the world, while most of the debt in Japan is actually owed to the central bank or to Japanese people. So let's now take a moment, get deep into what happened historically in order to realize what exactly led to that bubble that happened in 1995 and what exactly caused it to burst that they can't actually fix the problem even 30 years later. Now, back in 1945, Japan was one of the countries that suffered the most from that war. Two countries that suffered the most was Germany and Japan, because these two countries lost the war. But because these two countries had already a long history of being this disciplined, they had this culture of innovation and growth, they quickly got themselves together and recovered, and especially with the help of the United States, because after World War II, Japan and Germany became the closest allies of the United States. Because technically, the United States literally just took these countries and signed agreements that was favorable to the United States. So these countries got themselves together. Now they had access to the US market, and they started slowly growing and using US technology and taking advantage of the US market. And that's why if you go back like to 1970s and 80s, some of the most prominent names back in the day was companies such as Sony, Honda, Nissan, Canon, Toyota, Mitsubishi, and others. These are the companies that started slowly taking off not just the Japanese market, but they also took over the United States. You see, the business was very simple that the Japanese companies actually built. This is Japan, and Japan is significantly back in 1960s is poorer than a country like the United States, because United States at this point is the wealthiest country in the world. What do you think Japan does? Japan starts producing cars, machinery, tech at a significantly cheaper price than companies can do in the United States. And then they start selling all of those goods and commodities in the United States. Now, think about that for a moment. If you want to buy an American car that is made in the United States, for example, a GM or a Ford, it is going to be much more expensive than a Japanese car, because Japan at that point was significantly poorer, and to produce that car in Japan, you could actually pay lower wages. The land in Japan during that days was much cheaper than the United States. And that's how Japanese cars started taking over the United States. And if you go back to 1980s, there was a serious oil crisis where oil prices shot to the roof. And if you know anything about American cars versus Japanese cars, first of all, are much cheaper. Secondly, they are much more reliable. And thirdly, they are much more fuel efficient. So from 1980s, people realized that it's much better for them to actually start buying Japanese cars compared to American cars, unless you have some extra money and you want to flex and you don't really care about those prices because you have enough money in the bank. But that's not the case with the vast majority of Americans. The second thing that Japan did during the days is that a lot of those companies were subsidized by the government, because government realized that with its help, they can actually take the United States over the market of the United States. And that's something that reminds me of what's happening in China. Because if you take a look at China, the last 30, 40 years, and even today, you will realize that a lot of those companies, the reason they got out of China and became so successful, because the government was there to back them up. Now, there is absolutely nothing wrong with that. This is a practice that has been happening all over the world for the last, I don't know how many years. Companies, so now because of government subsidies, they can sell the exact same products at a cheaper price in the United States. When in comparison, in the United States, companies like Ford and GM weren't really as subsidized as Japanese companies. Another thing that actually led to that bubble is that low interest rate. The Central Bank of Japan lowered interest rates in order to boost the economy, so a lot of debt was actually thrown into the economy as well. A combination of all of these factors led Japanese companies to take over the world, not just the United States. And the business model was simple. There is a wealthy country, Japan is going to produce that at a much better quality, at a much better price, and then we'll ship it to the United States or even to the Western of Europe, because by that time, the Western Europe has already recovered from World War II and was one of the wealthiest countries out there. Guess what this created? This created a lot of tension between the United States and Japan, because as I have told you earlier, Japan started growing so fast that if you just go back to the headlines of 1980s, they would say that Japan is about to take over the United States. And the United States was afraid because, wait a second, we kind of gave you access to our market. We kind of gave you everything, not everything, but the reason you're successful is because you have access to our market. And now you're about to take over us? That doesn't sound like a fair deal. So when Reagan became the president, guess what exactly he did? He started putting tariffs. That is a very familiar word that we know today. He started putting an extra tax on Japanese cars when you ship them to the United States. He started limiting China. Today we are trying to limit Chinese products into the United States, but back in the days, we were trying to limit Japanese products to come to the United States in order to protect local manufacturers. But that's not the only thing that the United States did back in the days. They did something else. Besides the trade war, because unlike China today, that is a real rival of the United States, Japan was an ally of the United States. Yes, economically, it was about to take over the United States, but nonetheless, Japan did not have a military, and it relied on a military pact with the United States, and the United States could not treat Japan as this enemy. It could actually treat it as a competitor, but not as an enemy, especially when Japan no longer had any kind of military. I would say it did not threaten everybody around that area. So, guess what the United States did in order to save itself? They signed a deal that is known as the Plaza Accords back in 1985 in order to devalue the dollar. And guess what that means? You see, when you have a strong currency in your country, it might seem great because you can go to other countries and they have weaker currencies, and you come to that country with your US dollars and you can flex, you can buy things, you can rent houses at a much cheaper price, you can literally enjoy everything. But the downside of that strategy is that when you actually, imported goods in your country are cheaper, but whatever is produced in your country is now more expensive. So who do you think suffers in that case? Of course, local manufacturers start to suffer. And that's why when you have a strong dollar and you have a very weak Japanese yen, suddenly Japanese cars are much cheaper just because the yen is weaker compared to the dollar, and US companies, US cars cannot be shipped to Japan, for example, because nobody will buy them in Japan because they will be significantly more expensive just because the dollar is more expensive. Now, to solve that problem, they got together in a room and they decided that let's do a deal. We are going to devalue the dollar. Now, the dollar is going to be less valuable, which means that yen is going to be more powerful, which means that Japanese goods starting from today that will flow to the United States are going to be more expensive. Guess what that means? That means that less Americans are going to buy those cars. Less Americans will buy those electronics. Less Americans will buy those machinery. Less Americans simply will buy Japanese goods because suddenly their prices are rising in the market. So what do you think Japan did at this point? Japan wanted to keep growing its economy because it has been growing astronomical over that period. Now, this business model that they have created over the last 30 or 40 years no longer works. So Japan wanted to do something very different. Instead of actually trying to rely on exporting its products, for example, to a country like the United States, it tried a completely different strategy. It went inwards and it tried to actually invest everything inside Japan and grow the Japanese economy, grow the Japanese stock market, make people spend more in Japan, make people invest more in Japan. And that was the next strategy. But in order to do that, you need a lot of money. So the Japanese government started borrowing a lot of money and throwing them into the economy. First, they loosed a lot of monetary policy, which means that debt became more accessible. Then they started borrowing and spending more money into the economy. And that led to something that we call an economic bubble. In fact, during that period when Japan was at its peak, Japan was literally buying everything in the United States because of how powerful Japan was and how powerful the Japanese yen became after that. And that's why if you just take a look at the national debt of Japan, compare its GDP, you will realize there's a clear point at this point where Japan's debt suddenly started growing dramatically, because this was the period when They have actually signed that deal at this point, and then the debt suddenly started growing and it doubled by 1996. This is the point when the bubble actually burst, and that was basically the end of the Japanese economy, or the Japanese economic miracle as they call it. Now, just to tell you how bad the situation or the bubble was during that period, do you see this picture? This is the Imperial Palace of Japan, and everything around it, it's a pretty small area, or a pretty small piece of land, I would say. Of course, it's a huge piece of land if you actually go there, but in comparison to the entire city, it's absolutely small. Now, during the peak of the Japanese bubble, this piece of land, which is very, very tiny, was more valuable than the entire real estate in the entire state of California. That's how bad the situation was. Now, this is the single most important thing that you have to know about how big the bubble was during that period. So it was very clear that this is going to collapse. This is not sustainable. It is going to collapse whether you want that or not. Now, just to give you another example of how bad the situation was during that period is that there was a company called NTT, and at its peak, its valuation was $2.5 trillion. Now, today, $2.5 trillion does not sound insane because we have companies such as Nvidia, Apple, and Microsoft, or probably even Amazon, or that worth around $2.5 to $3 trillion. I think Apple even worth like $3.5 trillion. I mean, it fluctuates, but it's around $3 trillion. But we're not talking about today. We are talking about 1990s when $1 trillion valuation was insane. I think the valuation of Apple during those periods was around like less than $100 billion. So this company was worth $2.5 trillion. Just to give you a perspective of how insane that is that this single company was more valuable than the entire stock exchange of London. Can you comprehend that for a moment? London is the second financial center of the world. A lot of large companies are actually listed on the London Stock Exchange. Now we have a single company in the Japanese market that is as valuable, if not more valuable, than the entire stock market of London. That's how bad the situation got with Japan. So at that point, I guess everybody was like, all right, this is a bubble and it is going to burst. But people weren't willing to actually stop, because when you have something growing, like when you have something growing, people buying and selling, people buying and selling, people buying and selling, and keeps growing. But at some point, it has to collapse. The same thing, remember, it happened with Bitcoin, it happened with housing market in 2008, it happened with internet companies back in 1990s, and it happened with a lot of other markets as well. So this is not unique to Japan, but this was probably the most insane bubble that the world has ever seen in the entire history of humanity. I mean, maybe not the most insane, but certainly one of the worst bubbles out there. But the question that is very interesting is that if the bubble burst here back in 1996, why exactly the Japanese economy kept suffering even though that the bubble has burst? I mean, I understand that it takes maybe like 10 years for the economy to recover, maybe 15 years, maybe, slightly longer than that, but 30 years for the economy to recover and it hasn't yet recovered and it seems like it's going to get worse. This is something unheard of. So let's try to figure out. What happened during this period is that something that we call a deflationary period. See, when you have an economy and it's spinning, it's like a wheel. Like, think of an economy like a wheel and it spins. If it stops spinning, it's very difficult to actually spin it again. And that's why if you go back to 2020, the Fed threw so much money into the economy because this is exactly what it was afraid of. Because if a period of deflation starts in the economy, it's very difficult to reverse it. And that's something happened in Japan, because a deflation is exactly opposite of inflation. Inflation means that prices are rising. Deflation means that prices are falling down. So if you know that, let's say you want to buy a car and you know that the price of that car next year is going to fall down, what are you going to do? You are going to wait another year. And then you wait another year to buy that car, and then you know that prices are going to fall further. So what do? You wait more. So you're not spending, you're saving your money. Especially when I'm not talking here about like things you buy, such as cars, such as houses, just for your own utility, for your own use. People didn't invest back in the days because people were afraid that if they start investing, there is going to be another bubble. What do you think the government did? Of course, the government wanted to somehow get the economy out of this because the only way for the economy to grow is for you to spend. And people are saving their money. So you want to reverse engineer this into the thing that people start spending more money so that the economy starts growing again. So if you kind of take a look at the interest rates of Japan, they kept lowering them down. By the year 2000, interest rates in Japan were like 0%. Something like that happened in the United States in 2020, and we know what happened. House prices shot to the roof. Stock market shot to the roof. Everybody was making a lot of money. Crypto was like all over the place. It was literally going to the moon, and people made like astronomical amount of money. But this is just the beginning. Because if you go back to the numbers, by 2016, the Japanese economy lowered interest rate by 0.01%. So Japan had like negative interest rates in order to save its economy. But all of these did not help the economy. All of these did not lead to the economy to grow. So the Japanese government started taking a much more extreme measures. They started pumping trillions of dollars into the economy. So if you kind of go to 1991, you will realize that the debt to GDP ratio was 66.5%. What do you think happened next? They started throwing trillions of dollars into the economy, and by the year 2008, they have already spent like their debt to GDP ratio was around 170%. Just for the context, this is already more than the United States has today, because the US debt to GDP ratio today is around 122% or something like that. And the interesting thing about it is that if you just go back to the previous chart, you will realize that by 2008, Japan finally solved its problem of deflationary period and the economy started growing again. And you can see that they have already hit a new record of the economy crossing a $6 trillion mark. But guess what happens? In 2008, the US economy collapses and it takes down with it the rest of the economy. Finally, the Japanese people who, after a decade of saving their money and being afraid to invest in anything, they started buying something, investing in something. What do you think happens? Everything melts down. What kind of a message does that send to the average Japanese? It threatens them. They're like, wait a second, we started investing back in the days, like back in 1980s and 90s, everything collapsed and we lost everything. Now we started investing again. Now the exact same thing is repeating and everything is collapsing. What are we supposed to do? Though the deflationary period started again. So all that spending trillions of dollars by the government didn't help. 0% interest rate did not help at all. And the economy started collapsing again. And that has been continuing since those days. And today the GDP of Japan is like $4.2 trillion, which is, to be honest, is a lot from one perspective. But overall, when you know that the GDP back in 1996 was much more than it's today. And this is what they call the lost decades. I mean, back in the days, they used to call it like the lost decade, but today I would add yes, because I would add an S because it's lost decades. For the last 30 years, the Japanese economy did not grow. On the other side, it started growing down. And you have to understand that when you're not growing and you're kind of staying in one place, what do you think happens? The rest of the world is growing. You are staying in one place. So eventually, you are actually going back if you're not even growing by at least a single percentage every single year. Like the US economy grows by like 2 or 3% at best. And that actually allows the US economy to grow to those numbers like $25 trillion. And if the Japanese economy had the exact same growth rate as the United States, things would be significantly different today. Now, the main question is not, why can't Japan solve this problem? You got a crisis, understandable. You got a bubble. I mean, who doesn't have bubbles? I mean, just ask the United States. They will tell you everything about bubbles. Bubbles are just part of the US economy. 1999, 2008, and I think more bubbles are waiting for us. Anyways, the problem with the Japanese economy is that they don't have people. the demographic problem in Japan is significantly worse than most of the other countries. I mean, technically, it's not really significantly worse, but because of the Japan's policy, it makes it significantly worse than the rest of the world. First of all, Japan has 28% of its population over the age of 65. When you have so many retired people and you have less young people, that creates a pension problem, because today's young people are working and paying taxes in order for the elderly people who have retired to be able to afford their lifestyle. But when you have very few young people and a lot of elderly people, you have a crisis, because you can actually tax the young people. But the problem is that there is a limit to how much you can actually tax them. And if you actually take a look at the demographics of Japan, you can clearly see that the number of people under 30, for example, are very few, while the vast majority of people are either over 65 or about to reach their 60s. And that's the biggest problem that Japan has. And the birth rate in Japan is like 1.3. Now, 1.3 is very normal when it comes to the developed world, such as the United States, Germany, the UK, France, and other developed countries. But the difference between Japan, for example, and a country like the United States is that people go to the United States. Whatever opinions that you have about immigrants, you have to understand that the inflow of immigrants allows the US economy in order to stay the way it is and keep growing, because you need people. If people are not giving birth, then at least you need people to come from the rest of the world, from other countries. But that's not something that's happening in Japan, because nobody wants to go and live in Japan. Japan is a very close country. They're protecting their culture. They're protecting their people. Yes, it has its own advantages. They have still the culture that they had for like thousands of years, or at least a few hundred years, and that's not something that's happening in the United States. But that is actually costing them their country. It's costing them their economy. Either you have to give birth on your own, or you have to let people to come into your country and give them the circumstances or the kind of a system where they can actually come to your country and build their lifestyle out there, and that's how you grow your population at least. And that's why if you kind of take a look at the population of Japan, it's around 124 million people. But by 2050, that number is about to decrease to around 100 million people. And that is one of the worst demographic crises probably in the world today. And by the year 100, it's expected that the population of Japan is going to go down to 62 million people. So Japan over time is probably going to disappear from the face of the earth, and people will forget what Japan was once upon a time. Now, I can't really predict the future. Maybe something will happen. Some economists say that Japan is finally solving its deflationary problem, but the situation is so bad that we need at least like 5 years of economic growth or GDP growth in order for us to really understand and have some faith and confidence in the Japanese economy. But the most important thing that I want you to check out of this video is that long-term investors always beat speculators. Everything that happened with Japan is speculation. Like, it started growing so much because people didn't do their analysis, didn't actually do their valuation analysis, but actually thought that things will continue to grow. And that's the importance of actually analyzing your investments before you actually throw in your money. When you take a look at the price of an investment, I don't care whether it's stocks, crypto, or real estate, you have to understand that the price you're paying to buy that thing should reflect its true valuation. And a lot of people that I see constantly get into the market with their limited knowledge, they don't really know how do they compare their stock prices with the true valuation of the company. And if you don't know something like that, then you can easily become a victim of those bubbles. We don't have like a Japanese style bubble in the United States, but there are small bubbles out there. There could be a bubble in the crypto space. There could be a bubble in a stock they're trying to invest. There could be a bubble when it comes to AI stocks. And the only reason you can find that out and not be a victim of this bubble, but actually invest in companies that will grow over time and guarantee you that financial freedom, is for you to know how to do that, how to analyze those companies, how to read their balance sheets, do a proper analysis, take a look at the stock and know how to compare it to its true valuation in order to know whether you are making a good investment or not. And that's something you must absolutely learn if you want to get serious about investing and making a rational investing decisions. Thanks for watching, and and I will see you in the next one.